Hello and welcome to a discussion on the preparation of financial statements. Once again, we'll take a set of financial decisions or business decisions and convert them into the financial statements. So for that we make an assumption that the accounting period is 1 year. So started business with cash 10,000, so that is a receipt, will be shown in the receipt in the cash flow statement and will be shown in the balance sheet as a source, and that too as a capital. Away loan 40,000, so loan is a receipt and loan is a source as a liability. Purchase goods for cash, if no information is given, by default we'll assume that for cash. So purchase inventory or goods 25,000, and inventory is an asset, and that will be shown on the balance sheet as an asset of 25,000. And inventory will continue to appear on the balance sheet as an asset till they are sold, and the moment inventory is sold it becomes an expense and called cost of goods sold. Purchase stock on credit, so creditor, we purchase acquisition of stock 10,000, the stock will increase to the extent of 10,000, so acquisition of stock has resulted in creation of a liability, and acquisition of stock has resulted in payment of cash. Purchase of plant on credit from X, so X is a supplier of plant. To make a distinction from the supplier of goods, we put X as a separate liability. So creation of an acquisition of an asset resulted in creation of a liability called the supplier of plant. In this case it is X. Sold 50% of the stock, we have 35,000 stock. The sales is 250,000, and we'll assume that entire sales is for cash. So 250,000 is for cash, and whenever there is a sale there has to be the cost of goods sold, and cost of goods sold will reduce the inventory to the extent of COGS. Salary per month is 5,000, and where the salary paid is 50,000. So salary as per the accrual principle will show 60,000 as an expense, but the salary paid is 50,000, so there is an outstanding salary, or there is a salary payable, a liability. The liability, if the expense, a particular expense is more than the payment, then there is a liability of 10,000. Whereas in case of rent, the rent for the year is 3,000 into 12, 36,000, but the rent has been paid is 72,000, so there is an advance rent of 72,000 minus 36,000, that is an asset. Now we can see that the advance rent is an asset and outstanding rent, the salary, is a liability. If the expense is greater than the payment, is a liability. If the payment is more than the expense, that is an asset. So in this case, outstanding salary is a liability and advance rent is an asset. Depreciation 20% on the original cost. So depreciation is a charge on the value of the asset to the extent it is used. So therefore depreciation is 6,000. Depreciation is not a cash item but is a reduction in the value of the asset, normally shown as in the original cost less depreciation on the balance sheet. So the book value of the plant is 24,000. Then interest for the period, interest is 10%, so 0.10 of 40,000, and we'll assume that interest has been paid. So interest for the period is 4,000 If not paid, then it will appear on the sources side of the balance sheet as a liability. And tax is 30%, so 30% on PBT, the profit before tax, is a income minus the expenses is a profit before tax, and on that we assume that the taxable income is same as the accounting income, so the tax is calculated on PBT and tax is paid immediately, and 37,000. So the profit after tax or net income in this case is 88,550, assuming that entire net income is been retained, no distribution, so the retained profit will be shown on the balance sheet. So the cash in hand will become the asset. Cash in hand is equal to the receipts minus the payments is the cash in hand. So two important items on the balance sheet, the profit and cash in hand, they come from the cash flow statement and income statement. Now with this understanding, we will also see the profit, the earning before interest and tax. The earning before interest and tax is equal to sales minus COGS minus salary minus rent minus depreciation is EBIT, which is a popular performance indicator of an organization. Thank you very much.